What's up, guys? My name is Nick and welcome to the channel. In today's video, I'm going to be reviewing the high yield dividend ETF NUSI. I'm going to be going over their fact sheet. I'm going to be going over the top holdings, and I'll be showing you guys how NUSI works. So guys, let's get right into today's video. I just wanted to show you my portfolio, how it's done for the week. I am down $411. However, I did earn $72.99 in dividends, which I'll be seeing in the next month or two. And then let's go to the activity sheet. And if we go over here to February 14th, as always, every Monday I deposit $125. And I had 3 buys, which were JEPI, NUSI, and Q Yield. And then going into the 15th, I received a $16.42 dividend from AbbVie. I actually received a lot of dividends on the 15th. $3.26 from Colgate, $3.34 from Hormel, $4.91 from Procter & Gamble, $6.50 from O Realty, and $5.32 from Stag. And then with those dividends, I had 3 buys of American Waterwork, Clorox, and Texas Instruments. And then on February 18th, I received a $1.44 dividend from Costco. And now I want to get into NUSI. As you guys can see, I have about almost $2,000 in NUSI, and I own 81.29 shares at an average share price of $27.67. And then if I go back to my activity sheet, I want to go over just dividends, and I do the symbol NUSI. And I want to show you guys that I started investing in NUSI around late April, early May. And as you can see, my first dividend was 81 cents. My next dividend was $1.92. And it just kept going, and it just kept increasing until today. I'm now earning $12.49. And I imagine at the end of this month, I'll get about maybe $13.40, $13.30 in dividends. Then now I want to go over to my research tab and click NUSI. And as you can see, we have a current price of $24.60. We have a market cap or assets under management of $874.53 million, which that's always great to see. That means a lot of people believe in this stock. A lot of people are investing with the company that manages NUSI. And moving on, oh yeah, as you can see, dividend yield 8.46%. Then now let's go to the fact sheet. And once again, you can see NUSI, which stands for the Nationwide NASDAQ 100 Risk Managed Income ETF. Once again, share price of 24.58. And it has an expense ratio, which is a little high. It's pretty high at 0.68%. But one of the reasons that the expense ratio is so high is because it's an actively managed fund. And I'll be going over that information in a little bit. But they do say the 12-month trailing dividend yield is 8.5% here. So if we take the 8.5, subtract 0.68%, you'll get an actual dividend yield of 7.82%, which is very high. And as I showed you guys earlier with my activity sheet, I've owned NUSI for about 9 months, maybe 10 months, and it has just continually given me a dividend. And so guys, right here, NUSI seeks to provide investors with high monthly dividend income, portfolio volatility reduction, which I will show you guys in the back test later, and a measure of downside protection. So that was one of the interesting things about NUSI, or unique things, is that they also actually offer downside risk. And so what that means is NUSI does cover, it's a covered call ETF. However, they also do a put option, and that's what helps them have that downside protection. So I'll go over their investment strategy. This is just showing the company harvest volatility management. And so step one, what they do is they purchase all of the stocks in the NASDAQ 100. They do a rules-based options collar strategy, and then they pay out monthly distributions to investors using a portion of the premium with a call option. And then the additional premium is used to reinvest in the underlying portfolio of NASDAQ 100 stocks. So how does NUSI fit into your portfolio? NUSI is designed for income investors seeking to lower their exposure to market volatility and minimize the potential for losses during a down market, which is what we're currently in. And NUSI can be used to enhance and diversify core income-oriented portfolio allocations in the following ways. It could be a supplement to current income strategies during cycles of lower falling yields. It's a less volatile strategy for maintaining equity exposure during volatile market periods, where the protective put option offers a degree of downside protection. And it's a strategy for managing the risk of rising interest rates and the possibility of economic recession as an alternative to a traditional bond investment. And it's a complement to the traditional 60% equity, 40% bond portfolio, which potentially enhancing the yield generated by the bond allocation while reducing potential volatility of the equity allocation. So basically what this is saying is, usually if you ask a financial advisor, they'll probably tell you to be, as you get older, 60% in stocks and 40% in bonds. And usually you'd probably want to be like 60% in the S&P 500 and then 40% in US bonds or US treasuries. However, those bonds have insanely low yields. I once had a bond portfolio. I think the dividend yield was in the 1%, maybe 1.4%. Whereas if you get NUSI, it's similar to a bond in that it protects you more during a down market. However, you'd be getting a 7.82% dividend, which is significantly higher than the 1.4% dividend I was getting in my bond pie when I had it. So that's something to look at when you're doing research or more research for NUSI. And now I want to go over to the top holdings. As you can see, NUSI wants to replicate the NASDAQ 100. So the majority of their top holdings are tech companies: Apple, Microsoft, Amazon, Meta, which is Facebook, Tesla, Nvidia, Google, Cisco, and Adobe. And over here in the sector allocation, you can see that they have 51% in technology, 18.4% in communication services, 16.1% in consumer discretionary, 5.7% in healthcare, 5.1% in consumer staples, 2.7% in industrials, and 0.9% in utilities. So as you can see, it's very tech heavy. And now I'm going to go over to the back test. So I have it set at the initial amount of 100K. We're not putting any extra money into it. We are reinvesting the dividends, and I'm going to display the income. So we're going to back test with 3 different ETFs: NUSI, the QQQ, and SPY. And the QQQ is the NASDAQ index. So I've already done analyze portfolio. And if we go over here to portfolio returns, as you can see that obviously NUSI came in last place as expected. The QQQ performed the best, and SPY came right in the middle. But what I want to show you guys is right here on the line graph. So as you can see, NUSI is blue, QQQ is red, SPY is the orange line. And in March of 2020, during the last big crash, NUSI actually lost almost $2,500, QQQ a little more than 10K, and the SPY lost almost 20K. So that's showing you that downside protection that NUSI has, and that it held most of its value during the most recent crash. And as you can see, it actually took 2 months for the QQQ to bounce back and overcome NUSI. And that's largely because tech stocks had a huge rally. And then if we come all the way over here, you can see that it wasn't until February 28th of 2021 that the S&P 500 started outperforming NUSI. And you can see that's 11 months before the S&P 500 could surpass NUSI. And then as you can see, that's just a bar graph of the returns. And what I want to show you guys last is the portfolio income. And as you can see, NUSI in 2020 provided $8,509. The QQQ provided $635, and the SPY provided $1,782. In 2021, NUSI provided $9,705. The QQQ was $804. The SPY was $1,819. And so far in 2020, NUSI has provided $779 in dividend income. So with all of this being said, if you are more of a growth investor, you'd probably want to look into the QQQ or the S&P 500 instead of NUSI. Or like we read before, you could do a 60-40 portfolio, maybe 60% S&P 500, 40% NUSI. That way you get the growth and the dividends at the same time. And if you're more of an income investor, NUSI would be what I would say would be the way to go because of the high yield and because of the downside protection. And so that's the end of the NUSI segment. I did want to go over one last thing with my dividend income chart. As you guys can see, my monthly dividends. I just wanted to show you guys in February of 2022, which is the second month of the first quarter, I have currently earned $112.14. And I want to compare this to November of 2021, which is the second month of the fourth quarter, where as you can see, I earned $115.03. And so far in February, I still haven't received my NUSI dividend, which as I said could be around $13.30. I have yet to receive my good dividend, which should be $21.75, or my LTC dividend, which would be $7.68. So I'm going to completely blow by the November number. And the reason why I'm going to surpass November in my February dividends is because I didn't receive a Q yield dividend in November. So the way Q yield works, and I'll be creating a video in the future about Q yield, is every once in a while they'll pay you 2 dividends in a month, one at the beginning, one at the end. And then usually the next month or the month before, the Q yield will not pay a dividend. So I think in June I actually received 2 dividends from Q yield. And then I don't think I received one in July, or no, it was May that I didn't receive a Q yield dividend. And then every month since, I received a Q yield dividend, except for November, no dividend. December got the dividend. January, I got the huge $58 dividend. And then February, I received the $24.79 dividend. So that's just something I wanted to point out. And I want to say, thank you guys for watching the video. If you made it this far, you're one of the 10 to 14% of people that made it this far. I just want to say thank you for watching. I appreciate you guys watching my channel, especially all the way to this point. If you guys could, please like the video, comment down below because I will answer your comments, and consider subscribing if you want to see more investing content like this. And one more point I wanted to make is M1 Finance is currently doing a promotion where, oh, and it's gone. They're doing a promotion where you can get, if you sign up and deposit $100, you'll get $50 back from M1 Finance if you click my referral link in the description. And I remember when I clicked someone's referral link, I think I received $10. And maybe I'll show you in the next video if I can find it where they deposited the money. But yeah, I think I received $10. The other person received $10. But the way I see it is, why not sign up and get $50 for free from a large multi-billion-dollar corporation? And guys, you can also, if you'd like, in the description, there's Webull. You can get anywhere from 2 to 4 free stocks if you sign up with my link. And of course, guys, you don't have to. I appreciate you guys watching it this far. If you guys could like the video, that would mean a lot to me. So thank you guys, and I'll see you next time.